Hey, welcome back to Driven Channel here with a powerful guest, the Richard Gonzalez essay. Hey, bro, let me get started with the essay part. I heard you're like the East Side King,
Yes.
but you're and you have a big portfolio in real estate. You raised 20 million bucks, but then again, people might say, "Hey, he raised all that money," but you also have to deliver, and you need the credibility for people to believe in you and for you to do what you did. Like you have a lot of properties,
Yep.
and you were born in Mexico.
Correct.
So like how does somebody like you just get into real estate, you start investing, you start buying properties, and then especially how long have you been doing it for?
Almost 10 years.
So you've been through cycles, you've been through downtimes.
Yeah, I wasn't in real estate in 2008. So I have not been through that cycle, that type of cycle. But in my opinion, I mean, the market already crashed over a year ago. Again, the local market.
Yeah. So how does somebody get started in real estate? How did you get started?
So I pretty much got started by accident. I used to live out here in LA. So I grew up in a small town in Ventura County named Santa Paula. So 30,000 population. So very, very small town mentality. It's kind of one of those things where everybody knows everybody at school. Everybody goes through the same teachers, same friends throughout your entire, school career. Eventually, when I was in high school and I graduated, I went to Cal Poly San Luis Obispo. And in there, I met somebody that got me into business. So I got recruited into a network marketing company. So maybe some of you guys have heard of it, ACN. It was a telecommunication. So it was hitting California big. Every town, everybody was getting, the presentation. So at 18, I pretty much dropped out of college to build a network marketing company. So that was my start to business just in general. Obviously, I always had that itch during school, during high school. I would kind of same thing, sell CDs, sell this, sell that. I just knew I wanted to do something different, So I always been kind of like that guy, where when I was in that company, people knew me as a phone king because they're like, okay, you're selling phone things. Eventually, that helped me get my personal development kind of going. They force you to listen to audio tapes, John Maxwell, Tony Robbins. And that was my start to like kind of get into that entrepreneur career. So fast forward today, it's been 23 years. So I've been an entrepreneur for 23 years. Eventually at 23, I started my first company, which was in the credit card merchant services business. So I was setting up businesses to accept credit cards. Mostly
You used to do that?
I still have the company, yeah. Obviously, I haven't added a single merchant in almost 10 years. So basically, since...
Do you still make money?
Yeah. I still have maybe about 400 merchants that, pay
400.
me. Yeah.
How much do they make a month with that?
I still make a little bit over almost 100 grand a year. And it's been 10 years I haven't touched it. So...
Wouldn't you make more money if you touched it?
Yeah, but the acquisition price doesn't make any sense now because that's what taught me you become an investor, right? Cost of acquiring a customer.
Yeah.
And back then, you can make your money back in 6 months. You got to buy a terminal. You got to give them free paper. You got to give them everything. Now, I mean, you might have to wait 2 years until you actually become profitable. So your worst nightmare is somebody switching processors for almost 2 years. So it wasn't a business proposition. So when I was in that business, again, I was doing it out here in LA, which was very, very competitive, super saturated industry in that space. So I ended up moving out to San Antonio to a new market.
How old were you when you moved over there?
I was 28, so I was 28 years old. So basically, I was 5 years into the merchant services business. And for me, San Antonio was like the best move. 80% of my clients were Latino based. The Mexican restaurants, the carnicerias, taquerias. I focus on them. The beauty salons.
You don't think it's nicer here though than San Antonio?
Yeah, it definitely is. But the opportunity, the wave. So I knew a lot of people that had made a lot of money in merchant services. So I kind of caught the tail end of the wave out here.
Mm-hmm.
A lot of the people that I knew, they were maybe 5 years before, where they made a killing. So I caught the tail end, and then I ended up moving to San Antonio to expand it. And again, I went out there just to check out the...
San Antonio's close to Corpus Christi, right?
Yeah, 2 hours. 2 hours. And it's predominantly Latino based.
I used to have a crush on the chick in Corpus Christi. Her name was Selena. Remember Selena? No, I'm serious. Yeah.
Where?
Corpus Christi.
When?
It's been a while. Her name was Selena.
She was famous.
You remember Selena?
No.
Selena, the one that got murdered.
Oh.
You don't remember Selena?
Yeah.
Yeah, she's from Corpus Christi. Oh no. Yeah. No, but I'm serious. Like I felt like I was gonna, meet her, and then me and Selena were gonna hook up. But it was because I used to be a big fan. That's why I know Corpus Christi and San Antonio.
Oh, really?
Yeah.
Nice.
Yeah,
nice.
but I know it's a very like Mexican
Very.
area, right?
Yeah, I would say 70-80% Mexicanos.
Yeah.
So so for my motto, it was a good move.
So you went there because you moved there, and then
To expand.
and then what happened? You end up changing
Yeah.
directions.
So I was there about 3 years into 2-3 years into the merchant services, and we were doing good. I mean, basically, what would have took me 10 years in LA, we were able to do it like in 3 years. Amount of transactions, customers, etc. I had offices in Houston, Dallas, and San Antonio at that point. Business sales offices, going business to business, knocking on doors. Eventually, the payment apps started coming out. Square, Stripe, a bunch of them.
Yeah.
No transaction fees, no monthly service fees. We made income off the transactions, even though it was a couple cents, but we made money off the statement fees. So when somebody comes out and basically chops your legs, then your attrition goes down. And now, like I mentioned, the cost of acquisition becomes, very expensive. Luckily, when I moved out to San Antonio, one of my best friends moved out with me, and that guy was a real estate investor. He went bankrupt in the '08 crash, like millions of dollars. So basically, he was one of those guys that I knew growing up.
Yeah.
That was the most successful guy I knew. And now we're living together in a 1-bedroom apartment in San Antonio. And he's living in the couch and starts buying real estate. Again, no money. This guy's broke. This guy owes, a lot of money to the banks. But within 2 years, he got into vacant land. Within 2 years, had about 15 to 20 properties. And I'm watching them. I'm literally just watching this. He keeps telling me, hey, man, you got to get into this. The city is putting a lot of money, a lot of development, hundreds of millions of dollars coming in, infrastructure, this, that, into areas where they were, pretty bad. And I was like, man, I'm not interested in real estate, first of all.
Yeah.
I got too much going on. I'm basically losing my shirt. I got 3 offices that I'm bleeding. I can't keep up with the attrition. And within 2 years, he starts flipping them. He bought these cheap. He bought these 10 grand, 15 grand, 20 grand. And in front of my own eyes, 30, 50, 80. He sold one for like 120. He bought it for 10 grand. Within 2 years, that was it, man. My brain turned.
So you bought it for 10 grand, sold it for 120?
Yeah.
Like in how long?
2 years. 2 years. This was vacant land. Near downtown. Obviously, it was in the inner part of the city, in an area where, again, it wasn't as high in demand. It was a bad area, basically.
Mm-hmm.
Eventually, the builders started coming in. Different investors that wanted, those lots, and so I told him, look, anything you don't buy or anything, send it my way. So he didn't send me the prime deals. He sent me like the 30, 40, 50. This is vacant land too. So I ended up buying about 6 properties, and then eventually I sold those, and I used that money to start flipping houses. So leveraging it, with hard money. Normally, when you get it into a property, a lender wants you to, put down 10%, 20%, that type of thing. And that was my start to real estate. That was like my first, beginning.
Yeah. So you started making way more money doing that than the merchant.
Big time, big time. I mean, I had already 10 years into the business. So, and I was working hard. I was already supposed to sell my merchant service portfolio. Most people that get into merchant services, you build a portfolio of clientele and you sell it for a big multiple. You sell it to the processors, to the banks, to First Data, et cetera. That was the dream. That was the exit. And now, fast forward, the attrition's going through the roof. Nobody's buying portfolios. So basically, my 20s, I was building that, working my tail off. So when the real estate opportunity popped up, it was my way of gaining back that time.
Yeah.
I tell people the book Second Chance came out like that same year, that same month. Robert Kiyosaki, his first book, everybody knows about it, but the second book, I don't think most people know about it. Second Chance, and that one was just talking to me.
But you got into real estate at the right time.
Yeah.
Because after 2008.
Correct.
So like the market is booming. What do you remember when you got into it versus how it is now?
So the price has definitely gone up tremendously. Like, 3-4 times since I got into the market.
But when you got into it,
Yeah.
you were flipping some homes.
Yeah.
But they were going up quick, right?
Yeah, they were going up quick.
Like now, are they going up quick, or do you see something different right now?
No, it's going down.
You think prices are going down?
Yeah, big time. Yeah, the market right now is the time to buy. So right now it's not the time to sell at all, even in my market. So
right now you could get better deals,
way better deals.
but you got to hold them for a while.
You got to hold them. So right now, our strategy or my strategy is to basically hold the properties.
Buy and hold.
Buy and hold. That's the.
Are you offering less now when you buy?
Yeah, it's more aggressive. I'm one of the few people probably in my area that's even still active. 2017, 2018, that was like one of my biggest growth years. Then 18 hit, it was overpriced. Like people were asking double, triple the prices now for fixer-uppers. These are fixer-uppers.
Yeah.
These are 100-year-old homes. And I knew it. I said, man, I should have gone harder 2017.
Yeah.
That was my mentality, and I was kicking myself. I did good, but I knew what was coming. Eventually, everything got overpriced, so it slowed down. Today, I'm buying for less than 2017.
Wow, really?
Absolutely. So right now, there's a reason why I'm here. It's to be able to capitalize on the opportunity. It's almost like if I was kicking myself back then in 2018 and somebody puts me back and says, all right, Rich, you got a second chance. What are you going to do?
Why do you think you're prepared more than other people? Because there's people right now that can't buy, or people that they don't have any money to buy. Like, why are you prepared and they're not? So
I've been working on my systems and processes for almost 10 years. These houses need a lot of renovation. So one of the biggest skill sets that I realized right off the get-go, you had to be good at construction. You can't just be one of those investors that does cosmetics. It's not in my area. Again, these are very old, historic homes for the most part. The frame jacked up, the foundation. So I got really good at fixing those type of homes, which put me already in a different category of investor. So today, I can literally fix any house. Doesn't matter what condition it is. And actually, the worse, the better. Because I'm still going to basically rebuild it. So might as well have it already all jacked up. I don't care about cosmetics. Actually, I think cosmetics, I'm overpaying because I'm still going to even destroy it a little bit more, if that makes any sense.
So going back a little bit to your merchant services, when you were doing merchant services and Square came out, was it Stripe too? Stripe?
There was a bunch of apps.
Why did those apps affect your business, and by how much?
So I remember Square within 1 year, I forgot how big they grew. But basically they did millions and millions of merchants. They were hitting up the small business community. So they just had a big marketing campaign. So all of a sudden, we're just getting calls from all of our merchants. Hey, they're offering me this. They're lowering my rates. Hey, this, that. And you know, we're like, hey, hold on. Let's do an analysis. What they're offering you, you know, I can better it. But, I mean, they still got the market share.
So they charge less?
Yeah, they had no fees. No fees. Even today, if I ask the majority of the people, they're like, I have Square. It doesn't cost you nothing.
Yeah.
There's no monthly service. Right now, I can give you a card and you're like, let me load up Square and process it. Doesn't cost you.
But they still charge like a
Yeah,
percentage,
a percentage. Everybody charges a
Yeah.
percentage. Yeah, you have to pay a percentage regardless. But there's transaction fees. There's monthly statement fees.
I wonder how my merchant services, the company that I use, I wonder how they work, because when I charge like 10,000,
Yeah.
Maria, they deposit 10,000. Have you noticed that?
I don't like you to
Yeah, they charge something, they deposit the same amount. They don't keep anything. They don't even keep reserves. I don't know how they.
Do they? You might have what they call end of the month billing, where they just take it at one lump sum.
Oh, maybe they do. Yeah.
When you get started, they do daily discount. They call it daily
Let's check on
discount.
that.
I was about to say, oh my God.
No, because like I'll sell something for
Yeah.
let's say if 20 something, 30 something $1,000 closed,
Yeah,
that's what I get deposited. But maybe we have to look at the end of the month they charge the whole thing.
yeah, they have to. That's why
But
they send
they
you a
pay me
statement.
next day, and they don't hold reserves anymore. In the beginning, that was a nightmare because
Yeah.
Stripe's not for big
No,
accounts, right?
It's not.
When you get big, you want to get out of there, right?
You want a real merchant account, and that's kind of what we would tell the merchants.
Because then they start holding all these reserves, and
Yeah, the moment you start running a lot of cards, now they get freaked out.
yeah. So I know a lot of merchant companies make a lot of money now.
Yeah.
You wouldn't get back into that, or you're happy with just real estate?
No, yeah. At this point, I'm all in real estate.
Real estate?
Yeah, this is it.
So like, would it be safe to say like you're gonna be like the next Grant Cardone? Is that what is that kind of what, like in his, like the way he's doing Cardone Capital?
Hmm.
Is that something that you're gonna do similar, or is it different?
I'm gonna do. I'm doing something similar, but in my city. So.
So like you'll like, if somebody wants to buy property with you,
Mhm.
would you can they invest? You raise some capital, and then they get paid a percentage, and then when you sell, they get paid X percentage, like like how Cardone Capital is doing it, or is it different?
It depends on the project. So if it's a project that's going to be a buy and hold, it's a different type of plan. If it's a project that's going to be flipped, then so it just depends on project specific. But it's the same concept.
Yeah.
At the end of the day, they can come in. Somebody can come in and say, "Hey, I just want to be passive. Pay me the highest percentage I want to make. I can get." So then you pay them a percentage.
Well, so do you have a time frame as to by when you're going to sell it and pay them their money back? Or if somebody invests, could it take 20 years, 30 years?
No, typically we structure everything very short term. So meaning within 1 year, 2 years max.
Yeah.
Everything's very quick.
So let's say Maria has $100,000 in her bank account,
Hmm.
and she's I'm gonna buy my own property. I'm gonna put $100,000 down and buy a 3-unit property or whatever. Versus if she says, you know what, Richard, I have $100,000 here, but I don't want to deal with investing and tenants and all this stuff, and I'm gonna spend it. I'm gonna go out party. I'd rather just invest the $100,000 with you. Like how would her $100,000 work with you?
Yeah. So one of the main options would be come in as a private lender. So basically, we would find a deal that would fit that type of project, and we would fund it. She would fund either the acquisition or part of it, whatever the amount is, and then at that point we would fix it up. We would fix the property, get it to a higher value. That way there's a cushion of equity. And then at that point, once it's producing income, meaning we can rent it. If it's going to be a buy and hold, then now we can take it to our local banks and then have them refinance. So then the lender gets paid, a percentage of throughout the time that we use the money. So typically that's normally very common in private lending. It's no difference in hard money. The only difference that with hard money you're mostly using an institution, and everything has to fit their criteria. In the field that I play, I would not be able to compete with hard money institution. I got to make decisions. Like you call me today, I got a deal, I got to close that next week. So the way that I'm able to still compete today versus anybody else is because I can, first of all, it's in my area. Literally, there's a couple of factors that I look at, what's the price and what's the square footage. And then at that point, I'll look more at the location just to make sure, because somebody can say, hey, Rich, I got a $100,000 property. And I'll be like, how big is it? It's only 200 square feet. Okay, well, that's not going to work. That's pretty much a lot, but I have a $100,000 property, but it's 1,200 square feet. Okay, cool. Let's take a look at that. And then at that point, we assess the location just to see what the ARV, the value is going to be.
Yeah.
And then we calculate the rehab.
What does ARV mean to like the viewers that are watching this?
It's the after repair value. So basically, it's the market value.
So lenders will lend you on the ARV.
Yes.
So you could, like, if a property, you get it for 500, but it's worth 800 ARV, they'll lend you on the 800,000?
Correct.
How much percentage LTV?
Normally up to 70%. So normally the
well,
way
how do you make sure that the ARV is the ARV? Like, how do you sell it to the bank? Hey, this is the ARV, because some people say this house is going to be worth X. This house will be worth X, Y. This property is going to be worth. So what's the real ARV? Is it what comes up on? Do you use Zillow or what? Like, what do you use to come up with the ARV? Because everybody has a different
method
estimate.
Yeah, obviously, most people are going to go off the solds. But when you done what I done in my area, I just show them my last appraisals. I have hundreds of appraisals.
So you have a track record too.
Yeah, correct. So it just makes it a lot simpler to be able to show people facts and be able to say, hey, we're not just talking hypothetical. Yeah. We're going to actually show you something that we refinance in the last 30 days, which is very accurate. It's the same, the house is a block away from that one, same square footage, same finishes. This is what the price per square foot is. So
Maria, like if she's ready to let go of those 100K, what can she expect to make back and how quick?
Yeah. So she'd be able to make get her return within 12 months, just depending on the project.
Yeah.
And normally the typical return can be anywhere from 10% all the way to 15% return. There's factors involved.
Yeah.
Some people want a check every month. No problem at all. The beauty is that we're able to put her as a lien holder. So she basically has the lien, a first lien position in the property. So I can't sell that property without paying her off first. She goes into the insurance as the coverage. She has a title policy as a lender. Mm-hmm. So it's very secure. It's basically what they call first trust deed investing. And rather than just signing promissory notes and, hey, Maria, I'll pay you, I promise to pay you. No, this is very secure. And that's how we're able to. So right now, that's what we're doing. We're scaling to be able to scale our business and double the amount of properties, you got to get more private lenders. So right now, we're beefing that up.
So she would be a private lender.
Correct.
Right? You want to invest your 100K?
Sounds like he's selling me on it. That doesn't sound bad.
So what if the property, like, let's say in a year, for some reason you did your research and you got lucky or whatever, and the property doubled in price.
Yeah.
So then you sell it. You give her back her 100K, and then she makes a return of 10 to 15%.
Correct.
If the property doubled, does she get any benefit in the property doubling or no?
If it wasn't that for that type of project, no. If it's a flip or something like that, then she can participate in that. Obviously, it's a different structure.
Yeah.
You don't get as much guaranteed at the upfront. Then it's just basically your part owner.
So you just kind of, do you guarantee the 10-15% minimum?
If they just want to do passive, yes,
Mm-hmm.
that's guaranteed. And if the deal has enough meat, then we can pay more, because sometimes we get deals that are very prime location. We got to overpay a little bit. So then those, we know that, I mean, those are no brainers.
Yeah. So how do you raise 20 million? Like did that take some years, or was it for a big project, or how did you get there?
No, it's basically in the single family space, it's one project at a time.
Because you have 350 flips you've done.
Correct.
In how many years?
Almost 9 years.
In
It's
9
almost
years.
10 years.
And those flips were, so 9 years. That's when you raised the 20 million to do all those flips, or
Over time. So meaning over my career,
yeah.
of every project that I have done, you have to raise capital, right? Whether you're going to use a hard money lender or a private lender. Obviously, like I mentioned at the beginning, I was using the institutions. So you have to go to the, if you Google hard money Los Angeles real estate, you'll get the three main providers out here. At the beginning, my first projects, I started with them.
Private lenders are better though.
Way better. And what I realized was that there's a lot of private lenders out there that have retirement accounts. And these retirement accounts, they're basically not making them any money. And they can't touch it until they retire. So now they're just managing it themselves. That's what they call them, self-directed.
Yeah.
And instead of having it in the market, making 1, 2, 3, 4%, whatever the case may be, they can now invest it in a company like mine and make 3 times the amount. My number one private lender, I thought this guy was like, super rich, had a lot of cash, and then because I never see the money. It's basically we do a project, we connect them with the escrow. We order loan documents to let them know that, hey, they're going to be the private lender. This is the loan amount, and then they wire the money directly to the title company. So I never see where it's coming from. And he says, Rich, this is coming from my IRA account, right? And I'm like, what the heck? That's when it changed my mentality again. That's when I realized, holy crap, I have the product, you have the other missing piece, and we can grow together. So that's when I realized it's a win-win situation for both parties.
Because when they invest from their IRA, how much are they making in their IRA versus how much they're going to make here?
1%, 2%, I mean, maybe 3%.
So if people are watching this and they have an IRA and they have some money there, it's better if they invested in real estate.
Yeah, absolutely. Find a small a company that you can, that you can invest with them and watch the whole process. There's some people that say, Rich, I want to do a deal with you. That way I learn the process, no problem. After that, if they want to do their own deals, great. But the first transaction, I recommend do it with somebody. That way you can see everything from start to finish.
Because you do, like, you pay them 10 to 15%, right? More or less?
Yes.
Why is it? Because Grant Cardone, it's only like 4%.
Yeah.
Well, why is such a big difference?
Because what you mentioned, if they're getting a very low guarantee and upfront, meaning their monthly check is very small.
Yeah.
But if they do good, which it's going to take a while, he's mostly in apartments. I mean, it can be 5 years, 10 years until they finally get a different operator to either buy them out or refinance them. At that point, there might be additional income. It's still a what if. Here is a little bit more secure, simple. It's transaction based. So that's why it took this long to raise that much money.
What about right now in the market we are in? Big apartments, like big, nice, fancy, expensive apartments, like those Class A plus that like Cardone is investing in. You don't think that it's going to be kind of tough for those buildings to go up in value? Are they going to come down in value? How do you see that playing out? Like, let's say let's say Cardone right now, he's like, oh, you know what? I raised I raised 60 million and I bought a 60 million 180 unit property in Houston. Like, how do you see? And it's a Class A plus, so maybe they overpaid a little bit. How do you see that playing out in the next 2 years? Is it safe to say they lost money in the next 2 years, and then maybe it'll recover 6-7 years from now, or is there a way to make a lot of money right now and score a home run buying a 60 million A plus building? Like, how do you see that?
I think those are going to take a bigger hit right now because they're the ones that are going to take the most. They're going to be vacant. You know, there's a lot of incentives to be able to rent something A plus. You know, you get your first month for free. I mean, I'm seeing they're offering up to like 4 months for free.
4 months.
I've seen that in my area, because again, it's like inventory. You're gonna go after first. The lower price stuff is gonna go out first as a rental. Then, if there's no option, it'll start going into, you know, the other, especially right now. So in the long run, if they hold it, then it's just like the stock market. It's gonna go up and down. But I think for right now, you know, that's why if you know the guy, Kiyosaki's partner, Ken McElroy, they haven't bought nothing in the last 4 years, and they're big in apartments.
That makes sense, though.
So they know that right now they're going to bail people out that are not going to be able to hold on, and they're going to come in and restructure those big apartment deals that somebody paid for 60 million. They might be able to pick them up for 30 million because they're going to come in as the adjuster, basically. So if that guy's not buying, then there's something telling you what's going on.
Yeah.
And that guy's worth $1 billion.
Well, that's what they say.
Well, he has billions in assets for sure.
Mm-hmm.
I mean, he's partnered with Kiyosaki on those deals.
Oh, who?
Ken McElroy.
Oh, okay. No,
Yeah.
I was thinking about Grant Cardone.
Oh, okay.
No, because you said he's a billionaire. I'm like, well, that's what they say. I don't know if he's a billionaire, but like the other guy, he might be. Yeah.
Yeah.
Yeah. So, if you're watching this and you're like Maria, she's like eager to invest her 100K, and she's like, I want to invest 100K right now.
I got you.
Who would you recommend? Like, who would you recommend her to study? Like Grant Cardone, Robert Kiyosaki, and what would you advise somebody that has like 100K right now and they're like, I'm ready to invest, but maybe Maria doesn't want to take all the risks. She doesn't want to go and just do it herself with no experience. She'd rather just give it to an expert. And hey, I want to make my money for sure. Like, what would you recommend somebody just watching this, like Maria, that has 100K ready to invest?
Yeah, definitely study. You know, the Kiyosaki being an investor. So the quadrant, as he mentions, you want to be an investor. You want money to make you money.
Yeah.
So that's the ultimate goal for anybody. Even for me, what's my ultimate goal? Eventually, I'll be the lender.
Yeah.
All I want to do is just lend to people that are operators like me and know what they're doing, and I can see their projects, and then I'll support them. So eventually, that's the full circle, right? Right. The people, the 10 lenders that I mostly use, they're big real estate moguls.
You think Maria should invest her 100K in a $800,000 single family house? Or should she invest the 100K in buying like more units?
More units, yeah.
So you shouldn't spend all your money on a big house.
No.
Why not?
Again, it comes down, like they say, you make your money when you buy. So if you're already buying on top of the market, the chances of it going up even more, I mean, they're against you. Yeah, it's possible, absolutely, but all the deals that we do, they're undervalued, right? Because they need work.
So tell me like a good deal you got in the last month. What's a good deal you got? Like how much was it, where was it, and how much did you put down?
So a deal that they brought me, that was 120,000. We put 130,000 in renovation, so we're about 250 in, and it's worth over 360. So that's our typical bread and butter deal all day, and that's the value the moment that we're done with the property, not 10 years from now, a year from now. So immediately after we're done with the renovation, we almost have about 100,000 into equity. If we hold it 10 years from now, I mean, that can double, triple. Obviously, I'm in a market where it's the fastest growing market right now. Last year was Austin. Right now, it's San Antonio. So,
But you bought a house for 120K in San Antonio?
yeah.
How big was that house?
I mean, when we bought it, it was maybe 800 square feet.
And you made it. You built a bigger house.
Yeah. So the renovation, we added probably 800 and some square feet.
And San Antonio, it's in San Antonio, it's a nice area.
Yep. Downtown area. So all of our deals are in the up and coming downtown area.
Yeah.
So if you look at realtor.com and look at any down big city in Texas, which is
Yeah.
Houston, Dallas, or Austin, I mean, you can't find anything for $500,000 to $1 million in the downtown. In San Antonio, there's still really good deals.
So this property, you said you remodeled it, and it was valued at 360K.
Yeah.
So if it's 360K, can you cash out 80% LTV or no?
Absolutely.
Yeah. So you get a loan for 288, and you said you owe how much?
240.
So is that something that you would do? Like, would you
Okay.
refinance 80%? You take out 44,000 or whatever,
Mhm.
and then that money is cash free, and I mean tax free. You don't pay taxes because you're borrowing the money, and then you could use that money and put it into another deal, and then just do
Correct.
the same. And if you do that over and over again, eventually you'll have like unlimited properties,
That's the goal.
and then eventually you won't even need an investor.
Correct.
Is that something that you do a lot? You refinance a lot of those
Yes.
deals?
Yes. Yeah. So luckily, I've been able to hold on to, just under half of the projects that I've done. So we're holding a big chunk.
How
of
many
the
units do you have more or less right now?
portfolio. 180.
180?
Yeah.
And what is the net income on each door? Each unit?
The net income.
More like average, like $400.
No, because we're doing two strategies. So we're doing long term, and we're also doing short term. So on the long term, it might be
200?
It might be 200 to 300, and in the short term, it might be more like 1,000.
How many? Is it 50-50 or is it 50 like short term, 50 long term, or is it more like 60-40, 30-70?
Right now it's more 60-40, 60% short term. So that's a model that we got into.
So on average, would it be safe to say 500 net on each?
Yeah.
And it's 180?
Mm-hmm.
So like about like 6 figures a month that you're making, give or take, that are coming in?
Correct.
And then that's with you not having. Does this cover like the all the costs, like when you have to repair stuff, vacancies, getting new tenants, or do you have to use that money that's coming in? So from the 100K that's coming in a month, do you have to
Mhm.
use some of that money whenever you have to repair stuff, or is that included or factored in?
If it's a construction project, that's part of the acquisition. So that doesn't get accounted. That's basically a different expense.
Yeah.
But that money is used to offset vacancies, minor repair, supplies, of course.
Now, this money that's coming in every month from the property, from the income that's coming in, rental income and all that stuff, is this money tax free?
It's taxed differently. Yeah, it's
Because
passive.
you know Bobby Castro?
Yeah.
Because Bobby Castro, he says he makes $400K a month in passive income from his properties, and he said it's tax-free money, man. He's like, it's cash money. It's not taxed. So, meaning that he could use it for whatever he wants, and I
Mhm.
guess because of depreciation and other stuff that he could write off, that's money that's like cash money that he could spend on whatever he wants, and versus earned income. So how does that work? Like, how different is it to make $100,000 a month
Mm-hmm.
from rental income from properties that you own versus making 100 grand a month in earned income?
It's taxed differently. So earned income is taxed at the highest. Obviously, you're gonna have your deductions and whatnot, but passive income, it's still taxed, but it's taxed differently. So it's gonna be taxed lower. I think what Bobby is referencing, that with all the offsets, meaning depreciation, and anything else that he's doing, meaning maybe he's refinancing a property,
Yeah.
then at that point it offsets completely. So if you're doing real estate, buy and hold correctly, then you shouldn't be paying any tax at the end of the year, because that means you're reinvesting back into the economy.
Yeah.
You're growing your portfolio, and that's what the economy wants. Well, that's what the government wants. They don't want people to be hoarding money. They're going to tax those people. But if you're able to reinvest it, put it back into new properties, I mean,
So you could literally make 100 grand a month and not pay taxes on it.
Correct.
If you do it right.
Correct.
So Maria, question for you: like, if you invest 100K and you're making 10% return, how much money would you make a month?
Oh, a month for 12 months?
Yeah, 10% return on the 100K.
That's 10,000.
Yep.
I looked it up. No. 10% of 100K is not 10,000.
Yeah.
Oh, a little less than.
Yeah, just under.
So how much
1,000.
money would you make a month?
Maybe
She's pretty smart. So she could make $800 tax free.
Tax free.
Well, would she get the same write offs as yourself or the people controlling the deal? Like, are you gonna, like, how does that work? Like, if she's putting 100K, but she's investing 100K or 200K, but she's giving you the money, so she'll cut you a check, and then you go out there and you buy the deal, and then you pay her return. Is that how it works?
Yes.
And she has the same write offs.
No, because she's a lender. So basically, it's interest. So that's going to be part of her tax return as income, but it's not earned income. It's just different. And again, I'm not a tax consultant or anything, but it does go as income.
Why does Grant Cardone say that, like, the money that people invest in him, that they could also take advantage of the write-offs and all that stuff?
Because they're doing apartments. So in apartments, they're doing the bonus depreciation. So basically, they're depreciating. If you got 100 units, all the rugs, all the ceiling fans, everything that has a short lifespan, they literally create a tax, and they just speed it up. So they're able to basically take the deduction. Now it's 80%, when a couple years ago it was 100%. Next year it goes down to like 70 or 60%. So it was a rule that Trump put in, his last election.
Yeah, they say they're gonna bring it back though, right?
Oh, I'm certain that's going to be coming.
I think we're at 60% now.
Is it?
Yeah, bonus.
Last year was 80.
Bonus depreciation is 2024, 60%. And then yeah, I don't know how they'll change it. I think if Trump wins, it could be back to 100 now.
I think so. Yeah. I 2 years ago, I tried to get into apartments, which was the bad timing.
Yeah.
It was right when COVID hit. I had to refinance like about 60 properties, so pulled, a lot of tax-free money, and I said, man, this is my opportunity to get into apartments.
How much did you pull from 80 properties?
It's like over almost 8 million, something like that. It was something crazy.
You pulled that out under your name?
Yeah,
your
company? The company. So I figured I'm going to invest into apartments. This is my chance. And I always wanted to do, I like to do things kind of like, versus like when people own apartments, they're like, well, how many people in there? There's like 100 people that own the apartment. I wanted to control apartments where it's just me. Even though it might have been a 30 unit, 40 unit. And the day that I made that decision, there was apartments in the market that have been sitting for a year. I'm not kidding you. I made an offer. Within 2 days, 30 offers, 60 offers. It was right after COVID. There was nobody investing in commercial real estate, shopping malls. So all that institutional money just got pointed straight to apartments. So it basically knocked me out of commercial. But again, I'm glad it didn't work out, because then at that point, I wouldn't continue doing what I'm doing.
Yeah. So if people, Richard, if they want to, they're watching this and they're like, man, you know what? I want to work with Richard. I want to invest money. Do you only take people from Texas, or do you have people from anywhere in the U.S. or even international people that invest? Like, how does that work? And do you only buy properties in Texas, or you also go outside?
Yeah. No, anybody can invest. Doesn't matter where they're at. And we're only investing in Texas, and specifically San Antonio. So again, it's a niche market. And if I was an investor myself or going to lend to somebody, I want them to be the expert in that market. I want them to focus on a very particular niche versus them doing all the strategies, different markets, nationwide, that type of thing. So once again, like I mentioned, that's why my nickname is the Eastside King, is for that purpose, because once everybody realizes where we're at and how many transactions and properties that we own, they're like, oh, you're the Eastside King. I'm like, okay, that's going to be my name then. So just take ownership of it.
How do you decide when you flip a property versus you keep it?
The market. Right now, there you can't sell nothing. So
right now you just kind of have to keep everything?
You have to keep everything.
You can't really flip right now.
I mean, it would have to be
like a dream.
Yeah, it would have to be one of those deals in the right area. It would just have to be a no-brainer. But if it's something that you're like, I'm going to put in the market and see what happens, it's just not going to work. Right now, it's a ghost town.
Is that why a lot of flippers are struggling right now?
They are.
Especially here in LA.
Oh, man, I think everywhere.
Like, what are you going to flip here? Like, everything is overpriced. Everybody has like a 2-3% interest rate. Like, you literally cannot flip right here unless you, like, that rare moment. Like when you find the perfect wife. Like, it's kind of hard, right?
Yeah, very.
You're married?
Yeah.
Yeah. So, what about, Eric Spofford?
No.
So Eric Spofford buys houses in Ohio. Do you know Ohio, Cleveland? And they buy homes there for $40K, $60K, and then you put 25%, which is nothing. $50K, $40K, $60K, even 2-3 units, and then you rent those properties to Section 8, and then you get 1, 2, 3, 4, 5. Have you ever heard about those deals?
I heard of it. And it sounds good in writing. So before I came over here, I was on Friday, I stopped by with Ryan Pineda. He had a one day at his headquarters, basically hang out with him, check out his flips, and he was talking about that. He's like, I'm going to buy these deals in Ohio, Mississippi for $20,000. These are like 2,000 square feet homes. He's like, there's no way I could lose. Like, mathematically impossible to lose. He bought like 20, 30 of them, whatever it was. He lost money. And you're like, how do you lose money on something that the numbers are just, it's almost impossible. So he got out of that real quick. And he talks about it because he says, man, a rental is not a rental. There's a reason they're 20K. There's a reason, they're in those areas. And he just couldn't make them profitable. So he has a big rental portfolio too, but he prefers, better rentals, higher quality rentals. So it's not the quantity, it's the quality. So I thought that was very interesting that he mentioned that, because I remember, when you're networked with wholesalers, sometimes you'll get stuff sent from all over the place, and I see them all day, and I'm like, dude, that's impossible. You're gonna make $2,000 and only have to make $200. How can you lose? But so that's my thought process on that.
Where do you find the house for $20,000?
Ohio.
2,000 square feet for $20,000?
Yes, multi-unit.
And how do you lose money on that?
Again,
even if you let people live for free, like, what are you gonna lose?
Once again, I don't know.
Like, what's the mortgage? Like, what's the mortgage payment? So if it's 20 grand, 20,000, you put 25% down. You get a loan for. I don't even think they do loans for 15,000.
I don't think so.
Let's just say for fun, 7% rate. The mortgage payment is $87 a month. Like, how are you gonna lose money on that?
Even if it's $200 a month.
Like, fucking like $87 a month mortgage. Like, how do you lose money on that? Like,
Probably buying cash.
Yeah, I'm sure most of those, and I'm sure they need work too. So more than likely, it's going to be.
but then again,
Cash
a
transaction.
property like that is probably not going to be worth much, right?
Correct.
You're going to keep it for 10 years, and you're going to be like, damn, this shitty property is still worth nothing.
Yeah,
How much are you going to sell it for if you want to sell it?
yeah.
So you're the East Side King, and you mastered San Antonio, right?
Yes.
Are you also gonna do Dallas? You're doing Dallas or no?
No.
Dallas is
no.
expensive though, right?
Yeah, yeah. It's almost
Dallas
same
is
price.
almost like LA.
Basically. Austin's even at one point was higher than here. Austin.
So those areas are not that good for investing.
No. At least not right now.
Yeah.
So once again, those areas have already gone through, the wave, the gentrification, the growth. Obviously Austin got all the big companies from here.
Yeah.
So I mean, and things just doubled, tripled overnight.
So Richard, what can we do for you? Like, we're here with the Driven family loves you. You're gonna be at Driven 8. What can we do for you? Like what are you looking for in the audience watching this? Are you looking for people that want to invest and buy more, help you buy more properties, and you help them make more money? What is your main goal for the next maybe 2 to 5 years?
Yeah. So my goal right now is to be able to continue to scale. So I'm opening up my private lender group again. I've not added a private lender in maybe 5 years. So we're looking to double that. So that way we can double the amount of projects that we do. So the opportunities now, like right now is the time to buy, like I mentioned earlier.
But you got to buy and hold and keep it for a while.
Correct. And then wait until.
How long would you say you have to wait?
I mean, it can be 2 years, can be 5 years.
So somebody like Maria that is really like married to her 100K, she needs to be like, I'm gonna invest this 100K, but I'm gonna put it. I'm not gonna touch it for at least 2 years.
Yeah, she'll be able to get her money back within 1 year, and after that, she can just do another deal, because the whole goal is to continue. If we're gonna purchase 100 properties in the next 2 years, Maria can invest into as many projects, over and over.
Mm-hmm.
So that's how it works. Once that project is performing, well, now we can go out and, substitute it with long-term money.
Yeah.
So then she gets paid. So in other words, she doesn't have to stay till the buy and hold. She just gets paid right as soon as the process is completed, if it's a buy and hold. Yeah, it's like a CD, right? You're like, okay.
So instead of her like buying an expensive house here that's gonna be ugly and crappy for 800,000, she's better off using her 100K and buying like maybe multiple properties in San Antonio, and she'll make more money.
Absolutely, and she can start as a private lender. Eventually, she can even buy her own rentals.
Yeah.
And she can have a company like mine, even manage them. So then,
why don't you start like a coaching program and teach people like how to like buy their own deals, for people that are like, I don't want to share my money. I want to do it on my own. Why don't you coach them and teach them how to do it?
Yeah.
Have you ever thought about that?
Yeah, I thought about it. It's the timing. So right now, where we're at in the cycle of the opportunity, I wouldn't have the capacity.
So right now you have to move with speed.
And be laser focused.
'Cause
So
you could miss a deal like you could
Absolutely.
miss a deal like on the second, right?
Absolutely. I mean, right now, because of the
You're probably losing deals right now with this podcast.
Yeah, but luckily the social media helps me get my name out there. So now more wholesalers and realtors.
So they're looking for you.
Yeah, they're like, nobody's buying. Hey, Rich, I have deals in your area now. So that's what it's done for me. So that what the social media has done is.
Why didn't you raise like 100 million and just buy a bunch of like good deals and keep it for 2 years, and then everybody makes so much money like in 2 years?
Yeah, that's the goal. So what took me 10 years, I think we can do it in 2 years. And that's how we double our portfolio, literally, by using our resources, our experience, and leveraging that. So
right now there's a lot of opportunity, but less people with resources, right?
Correct. So that's why that's what I'm doing right now.
If people want to invest, what's the minimum that they could invest? What's the minimum that you take?
They can invest as low as 50,000. Obviously, we're gonna bundle it up with maybe another investor, just depending on the project. Obviously,
But 50 is the minimum?
50 would be the minimum.
What's the maximum that you've received?
There's no maximum.
What's the most that somebody has put?
$1 million.
And then if they want to send you some if they want to invest, they want to send you some money, where do they send it, and where do they find you?
Yeah, no, find me on Instagram, the Richard Gonzalez SA, and just shoot me a DM. I'm open to the discussions and explain the process. It's very simple, and like I said, everything's secured by real estate, meaning.
Because you said you put them on the deed and all that
deed, title policy, lender policy, insurance policy, etc.
Yeah. Cool. So, any other message, Richard, that you want to tell people here besides the investing? Is there any other things to look out for what's coming up?
Yeah, I would say if anybody's thinking of getting into real estate, obviously partner up with somebody first. That would be, in hindsight, what I would do first, because I lost money in my first deal. I lost 30,000, and again, we don't have time for that story. But
well, that's why I'm saying like if Maria's gonna try to do it on her own and buy it like a property she thinks it's cute, like from the MLS, and put 100K and then the property goes down 100K, she just lost the money.
Correct.
Versus like, hey, let me invest, learn how to do it, and then later on, if she wants to do it herself, she could do it herself, like you said.
Exactly. Then she can start getting some of her own rentals where she can make the passive income and offset her active income, because you're giving her raises, so she wants to offset that.
Yeah, she's paying her too much. Yeah.
Yeah, there's some people I know that make good W-2 income, and they're paying so much in tax that I'm like, man, if you just got one rental, two rentals, I mean, it would offset you tremendously. So I'm a big believer of buy and hold.
Yeah.
So I'm one of those guys that preach buy and hold.
Plus, you have all the experience. You know what you're doing. You've raised and invested over $20 million of other people's money, so you have a track record. Like if you would have not known what you were doing and you would have messed up, like it would have already been out there. You've helped a lot of people with their money, so why not just invest in something that's proven already? And that way you learn from there, and then if you want to do it on your own later, you could do it on your own. But I think it's a great thing you're doing, Richard. Like, you're helping people invest money. You've done it. You're a friend of mine. You're going to be at Driven 8. I'm excited. And you've done 100, I have it right here, 350 flips in your career.
Yeah.
And you kept, you said you kept how many? 180?
180.
You have it right now?
Correct.
So if you guys want to invest and you want to play it safe, then Richard, he's done it. He knows how to do it. The biggest mistake I made when I bought real estate was just doing it on my own and kind of messing up. And then I learned my lesson. Oh shit, I just lost all my money. Now I'm negative. But when you get practice, you get better. So you got all the practice. You're helping people invest. So if people want to reach you, besides your Instagram, all that, you want to leave them your number, email, or something?
Yeah, absolutely. Send me an email, Richard at housebuyer just how it sounds, BUYER, SA for San Antonio.net.
And I'll put the information below. Thank you, Richard.
Hey, appreciate you.
Amazing info, yeah.
Thank you for having me. Thanks a lot.